Hey traders, welcome to a global macro update. We're going to quickly go through the economic calendar for this upcoming week, and then we're going to get right into the charts, mainly really understanding if we're going to have a risk on or risk off sentiment week this upcoming week. And we're going to use a lot of different assets. Going to be looking at the charts pretty in depth in the next little bit. So first thing, we got quite a bit of retail sales from a few countries, notably America. We got on Tuesday, we got retail sales there, and then we see later on in the week we have retail sales from Australia, England, and Canada as well. So that's going to be interesting to see, as well as some GDP numbers. But the main thing we're going to get into is the possible move down within the equities market. This is the S&P 500 or the SPX, and let's just zoom out to the 4-hour chart here. So this 28 or 2980-ish range has been the 61.8% fib level that we were looking at as a key level of resistance. We'll just look at our fib right here. And if we go to the candle closure, it looks a little bit more accurate. It's not perfectly there, but this area right around here, the fib level is at 2950. The current level that I'm seeing is around 2960, so we would have to drop a little bit further. But if we do fall down below a little bit this zone, let's just bring this a little bit further down. And that's that area that we are looking to see the price fall below in order to have a risk off sentiment, where you're going to be looking at things like US dollars, Swiss franc. You're going to be looking to short equities. Crypto is probably going to be dropping as well because the correlation between Bitcoin and, for example, the Russell 2000 is very positively correlated. And we will look at the Russell 2000 really quickly in this video. So this is the daily. We see that we got a wick to the downside. Really indecision. There was a move down, move up. It did close higher than the open, so it was a little bit more bullish. It would be a little bit nicer to see a little bit smaller of a body if it was a doji, although this is classified, in my opinion, as a doji. Indecision in the market, and then this next candle is really showing its strength from the sellers, pushing the price down below the previous support that was held in the wick to the downside, the wick low, and we're just protruding really deep into the support here, and it's just a matter of time if we are going to break or not. So let's jump into the 4-hour time frame. I did put this descending trend line connecting the lower highs. We see wicks to the downside here, really getting smashed down by the sellers. We see a wick to the downside with a huge bearish engulfing candle engulfing 1, 2, 3 candles prior to it. And then we see a wick to the downside with a candle closure just barely above the open. Massive sell pressure to the downside, and now we're just getting a continuation here where we're kind of squeezing down. It would make sense if we were able to hold a possible support one more time. If we bounced here, that would be a nice descending wedge melt to the downside if we break the nice level of descending support. But a little too early to say, although right now it does look pretty weak for the buyers. If we break down the 61.8% level, I think it wouldn't be hard to assume that we would get to the next key zone, which is around 2765-ish, around there, and that I think would be the next key level of support we can see on the larger time frames. So that's what we can see within the SPX. Let's quickly look at the Russell 2000. Drop below a minor level and major level of support here. We got the ascending zone, which was a minor level, which we won't focus on too much. We'll mainly look at this key horizontal level that we can see. Let's just go to the 12-hour. And we can see it was a key level, previous level of resistance, turned to a new level of support multiple times, and now we're getting a drop below this zone. And then I just had a couple ascending trend lines connecting the higher lows, indicating a possible ascending triangle pattern that broke to the downside, or wedge. Definitely a wedge because it broke to the upside and then it failed to continue to the upside because the height of the triangle would have been the total breakout move. So if we go like this, that would be the take profit that you'd be looking for if you're looking for a bullish move in terms of an ascending triangle, in my terms, for take profits. So it failed, leaving a lot of people trapped. A lot of buyers thought it was going to continue higher, hit all-time highs. NASDAQ hit all-time highs, so a lot of people thought the small caps, I'm sure, was going to hit the all-time highs if they were looking for a bullish move to occur. So I'm sure there's a lot of people trapped here. Key level of confluence just got broken by the buyers. Sellers took over, and let's just jump into the 4-hour time frame here. Yeah, buyers tried to take multiple times. Bullish candle, not as hot, not as great as the previous huge bearish candle that we got, which closed at the very, very bottom, signifying that the sellers really kept the price there at the very, very end on a large time frame like the 4-hour time frame. And now we're seeing a candle closure to the downside. We got around 26 minutes until we see candle closure below this major level. And I think that's definitely indicating a risk off sentiment if we do get some sell pressure to push the equities down, because that's going to be in my opinion, key determiner. And we don't see the VIX open yet, and we don't see the VT total world equity markets open yet. So we'll skip those. And then something to note, let's just get a drink of water and then I'll continue. Oil is definitely making a series of lower lows and lower highs. Broke previous key level of support at around $40 on Brent and around 37 on Western Texas Intermediate. And then now we are looking like it could potentially break the new level of support, which is around 34.50 on WTI. And let's just move this up a little bit. If we're breaking 36.75 on Brent, that's definitely a little cause for worry for the buyers, in my personal opinion. We made a huge recovery from when we had that capitulation. You can see that in WTI, not really on Brent. See that massive move to the downside that we had on April 20th of 2020, and then we got a huge recovery. We were basically at negative numbers, and we recovered all the way to $40, which is pretty crazy. And now, after filling the gap, which we did right here, and then we just touched the $40 mark, that was the gap down. So we did fill the gap there, and it does look like we are retracing to the downside. So we'll see where it goes. There's not going to be a whole lot of volume right now. We'll see how the London Open and US reacts to the equities and the current descent that we're seeing within the oil prices. Now we're going to quickly look at the U.S. 10-year and 30-year government bond yields. So if this is going down, it means people are purchasing bonds, dropping the yield. Makes sense. There's less people who want bonds. There's going to be a higher yield to incentivize people to purchase bonds. If there's a significant amount of people in demand and want bonds, there doesn't need to be as great of a yield in order to incentivize buyers to purchase bonds. And we can see that we are dropping below a key level of confluence for the buyers, where we have an ascending level of support connect to higher lows, as well as a horizontal level, which was a previous key level of resistance indicated by this key resistance points we can see easily on the chart. And then we broke above. We were holding on the 1 day, pushing to the upside, but the global investors for bonds are definitely piling in, and we can see that the yields are dropping now back below the key level of support. So in my opinion, this also validates the risk off sentiment that we see. Oil going down is risk off, in my personal opinion. In terms of gold, we're just consolidating to really sideways in between around 1722 and 1745. Something to note, if we do have another liquidation event, if we do see stocks sell off quite dramatically, I do think that both silver and gold will be potentially subject to another sell-off that occurred, like we can see to the downside right here back in early March of 2020. These contracts that we're trading on the futures exchange, contracts for differences, these things are going to sell off because people are very leveraged on them usually. So that's the case, the actual physical delivery cost is substantially higher than the actual cost it is as you can see in the digital form. So that's not really going to go into it too much on gold. We see that there was a descending zone that was connecting the lower highs, broke to the upside with a huge bullish engulfing candle. We held the previous resistance, which is a new level of support, in confluence with this nice previous low we can see was held, very key level within the consolidation sideways. We have been holding a nice low around 1685, been really failing and not really been able to make the 1745 break last very long, as we can see. And on silver, we look like we held for a little bit. I think I'll just drop this a little bit because we did recover from that zone, but we're just consolidating in between around 1830 and around 1740. No real trades that I see on silver. We had some really strong pushes to the upside. Happy about the overall movement, and we're going to get some consolidation probably. And like I said before, silver is more correlated with Australian dollar, Canadian dollar, New Zealand dollar than gold in terms of a 180-day chart. We can look at that a little bit later if we would like. And we can see that the gold and silver ratio is moving back to the upside, meaning that overall silver is probably going to be depreciating quicker than gold, which does make sense. Gold usually holds its ground a lot more compared to silver. So that's the overall analysis on the global scale. Overall, I do think that we are in a risk-off sentiment where global investors are definitely a little bit worried. We're going to be looking to enter things like long United States dollar, CHF, which is Swiss franc, as well as potentially some JPY, if it does look relatively strong. And also be shorting crypto. Not really going to be looking at shorting stocks or indexes, to be completely honest. I think I'm going to be mainly sticking with those two. Metals could move down, but it's not really a risk-off investment in terms of gold or a trade, in my personal belief. The only thing that would make it really go down, in my personal view, fundamentally, would just be the liquidation event that did occur in early March. So that's my personal view. I think, why not? Let's go over a crypto market update here really quickly, just for a quick little bit. Go to the 4-hour chart. We do see a significant candle closure that we were unable to get below the $9,300 zone and really see quite a bit of aggression to the downside. We held since May 28th. We've been able to hold this key horizontal zone. We did have some ascending zones that did hold the higher lows. I think most of those have broken, if not all of those have broken. We pulled back, and I was personally just waiting for confirmation to see if we were in a risk-on-off sentiment, and we didn't really have much volume coming in until later on today. London session, the people in Europe are going to be waking up soon, and then New York is really going to be the determiner, in my opinion, to see which way crypto is going to be going. But overall, it does look like we are entering in a risk-off sentiment, meaning that crypto is probably going to be looking more bearish. I'm going to get a little bit of water here. And even looking at the price action, it definitely is showing that it looks like the bulls are weakening. We do see the daily candle close looking, or we got 18 hours, so we can't say it's going to close, but it is crossing below the previous resistance we can see on this ascending wedge, which was now a new support, held not once but twice, 3 times with this huge bearish candle that did hold. We got a couple days where we were bouncing above the $9,300 level of support, and then I think we are getting our move to the downside here. And if we get a retest of that $92.50, $9,300 support, that is a trade, in my opinion, that has a pretty decent risk reward, because the amount of potential that goes to the downside is pretty significant compared to the move to the upside. And just overall looking at the global sentiment, looking at equities, bonds, oil, looking at currencies, looking at, the overall picture, we, in my opinion, can see that we could get a potential move to the downside on risk on speculative investments like BTC. Overall, it is a speculative investment. I do think that it is like digital gold. It has tremendous value, but a lot of people who do invest and trade in cryptocurrency markets are speculative traders, and that's just facts. Especially people who are providing a lot of volume, liquidity in the derivative markets. Those are going to be a lot of traders, which obviously makes sense. It is needed for volume. So on the daily, 93, that's that key zone, I think, in my personal belief. And then also 85, like we've been talking about multiple times, those are going to be your two key horizontal zones that we're looking at. But that 93, pullback to that zone, I think, would be a pretty damn good entry that I would be looking for. I really wanted the confirmation to the downside, breaking the previous support, which ideally will be acting as a new level of resistance. And looking at the smaller time frames, that green zone should now theoretically be red, and we can also incorporate a potential descending zone that would be acting as a potential level of confluence if we do get a little move to the upside. You never know in these crazy markets, but even just looking at the average volume for all the major exchanges that retail traders trade at, we can see overall we're not really seeing that much buy volume. And we can see on the 1 hour chart, which is a little bit more clear on the smaller time frames, we are not really seeing that much buy volume. Let's just zoom in here so we're able to see things a little bit more clear. We do see a little bit of buy volume when we got that big wick to the downside. We can see this one right here. Let's just get our arrow. This big wick to the downside, we opened right here, pushed all the way down and came all the way back up and closed, not significantly higher, but higher than the open, and we got quite a bit of buy volume that did come into the market that was able to hold. But then 3 candles later, we got a huge amount of sell pressure with a huge bearish engulfing candle that really, well, it didn't really go from the previous one because it kind of needs to have a body, but a significant amount of sell pressure came into the market, pushed the price below a major level of support. Now we did get a wick to the downside here, but we can see on the 4 hour time frame we were able to hold the previous support. We can see right here we got a wick to the downside, came back up, and then this candle on, I guess, 5 o'clock my time, Pacific Standard Time, was the candle that was able to hold on the large time frame, which is the 4 hour, and we haven't seen that since 28th of May. So overall, it's definitely looking really bearish. I think if we get something like this, let's just get our bars pattern. I think that would be a good opportunity for a possible short, in my personal belief, if we are going to get a nice retest of that zone. We do have quite a bit of room before it gets to that zone, but overall, I think this previous support is going to be acting as a new level of resistance quite well. So we'll see how it goes. Overall market does look pretty bearish in terms of the global markets, which does look good for the short. And we do have high correlation with things like the Russell 2000, S&P 500, and Bitcoin. So we got to play it like that. We can't expect it to act as something that is like a currency like the Japanese yen, like the United States dollar, because it's not. People don't transact in Bitcoin around the world on a daily basis to purchase things, especially when the transaction volume can cost $6, $7, $60 sometimes to purchase a cup of coffee at the peak of the transaction volume in 2017, 2018. So, these things are not perfect yet, and they're not usable in everyday life. And right now we're using currencies, and that is where people are going to turn to if there is a huge sell-off. So that's my take on it. Hopefully you got something out of it. If you did find this useful or entertaining, whatever you get out of it, it'd be great if you would like the video and subscribe. If you did enjoy it, it means a lot to us. Thank you very much for commenting. For those who have commented, really appreciate it. If you would like us to go over an asset, a cryptocurrency pair, whatever it may be, definitely put it in the comments below, and we'll be able to go over if it's relevant to our video. Thank you very much for watching, and hopefully you had a great weekend, a safe, enjoyable weekend. It wasn't super sunny here in Canada, but made the most out of it, that's for sure, and hopefully you did as well. So hopefully we will have a good trading week this upcoming week, and hopefully you as well. Have a good one, and bye.